When your income includes salary, real estate transactions, and capital gains from investments, the Income Tax Department requires a specific reporting structure to categorize these different streams. For assessment year 2026-27, taxpayers without business income who have surpassed the limits of the simpler ITR 1 must use the ITR 2 form to remain compliant. It is important to note the absolute disqualifier. Any involvement in intraday trading or futures and options is legally classified as business income. If you have these trades, you must move to ITR 3. Selecting the correct form is the first step of the process. Choosing ITR 2 when you are ineligible will lead to your return being marked as defective by the department. Log into the Income Tax portal and follow the path to File Income Tax Return. Select assessment year 2026-27 and choose the online filing mode to begin. The portal is configured to the new tax regime by default. If you intend to claim traditional deductions under the old regime, you must manually select that option before proceeding. Within the Personal Information tab, check the Contact section. The portal now requires a secondary address to be verified or updated. If this address field is left blank, the system prevents reaching the final submission page, resulting in a validation error at the end of the process. In the Salary Schedule, transfer the data from your Form 16. You must enter the specific breakdown for basic salary and any taxable allowances as they appear on your certificate. Next, navigate to the House Property Schedule. This section is used to report rental income or to claim interest paid on a home loan. Under the new regime, if the property is self-occupied, the home loan interest benefit is removed. The deductible amount is 0. For let-out properties, interest deductions are capped at your total rental income. Any excess interest cannot offset other income. These rules mean that under the new regime, real estate investments can no longer be used to generate a tax loss against your salary. Market investments are handled in Schedules 11-1A for short-term gains and 112A for long-term equity gains. Use your broker's tax P&L statement to find your consolidated buy and sell figures. When entering expenses, you must exclude Securities Transaction Tax, or STT. The tax department does not permit STT to be deducted as a cost of transfer. Including it in your expenses is a reporting error. Verify that the net consideration calculated by the portal matches the final realized profit shown on your broker's report. You are also required to fill out Schedule F. This involves taking your total gains and distributing them across 4 specific time periods in the financial year. This chronological data is used to determine if your advance tax payments were sufficient and to calculate any interest owed for late payments. For the sale of land or buildings, use the Long-Term Capital Gains Schedule under the Land and Building module. Enter the purchase and sale dates along with the actual sale price. You must also provide the stamp duty value determined by local authorities. The portal performs a dual calculation for properties acquired before July 2024. It compares a 20% tax rate with indexation against a 12.5% rate without indexation. The system identifies the calculation resulting in the lower tax amount, applying that benefit automatically. This automated check is part of the system's updated logic to accommodate the tax changes introduced in July 2024. The final schedules to address are other sources and exempt income. You must report all interest, from savings accounts and fixed deposits, as well as dividends, ensuring these figures align with your annual information statement. Since the tax department has access to this data through the AIS, matching it precisely reduces the likelihood of receiving an automated inquiry. Proceed to Part B to review the final tax calculation. This section provides a summary of your total tax liability or the refund amount you are eligible to receive. Now click the Preview and Validate buttons. The system will generate a list of any missing data points or inconsistencies that need to be corrected before you can move forward. After a successful validation, the final requirement is the e-verification process, which is typically completed using an Aadhaar-linked OTP. Remember that your return is not considered legally filed until this verification is completed and acknowledged by the system. Following these steps ensures your ITR2 is filed accurately, meeting all current regulatory requirements for the assessment year.